Hey all, today I'm going to be telling you the fastest way to become a millionaire between either property or real estate and stocks. I'll be telling you the advantages and disadvantages of each and which way that I think is the quickest. Many millionaires have been made from investing in property, but many millionaires have been made from investing in stocks. So which way do I think is the best? And which way is the fastest and potentially easiest as well? But before we get started and answer this burning question, be sure to drop a like down below and subscribe to the channel if you haven't already for more videos just like this. Firstly, which one is the easiest to get started with? Which one has the least amount of barriers to entry? Which one can you start earlier and which one can you start with less knowledge? Well, it's very easy to trade stocks. You can trade stocks from home, at a coffee shop, on holiday, from your phone, from a computer, from an iPad. You can trade stocks in a variety of different ways, and you can't really do the same thing with property. You can't really buy property when you're on holiday. You need to get out there, you need to go and view the property, you need to speak to a mortgage broker, and a whole load of different things that you can't necessarily do from the comfort of your own home or on a plane or on holiday, for example. With stocks as well, you can invest with as little as £1, although it might be better to start with maybe £100 or £1,000 or even more. And obviously with property, you can't really buy a property for £1 unless you use a strategy that a lot of gurus advocate that I don't really like to advocate on my channel. You probably need at least £10,000 to get started in property unless you invest in a REIT. And obviously if you live in the southeast or in London, you'll probably need at least 20,000, if not a lot more. In terms of liquidity, stocks are a lot more liquid. There's millions and millions of shares being traded every single day in each stock. Whereas obviously with property, it's not quite the same thing. There's not millions and millions, tens of millions, hundreds of millions, billions of homes out there available all at once. It might take you a few weeks to find a home, or it might even take you a few months to find a property to invest in. Whereas with stocks, there's always going to be a stock available, whether it's in the morning or at midnight, whether it's on a Monday or a Friday. You can always find a different stock to invest in, whether it's a tech stock, a retail stock, a utility stock. It's always going to be there, you just need to go out and find it. Whereas with property, there's not always a property worth investing in close to home. With stocks as well, it's much easier to get started investing. You could use a paper trading account, which is like a practice account, or you could start investing with a small amount of money like £10 or £100, and that way you could learn how the market works and how the market behaves. You could learn how to manage risk and, more importantly, manage your emotions when investing. Whereas obviously investing in property is much more risky as a beginner, because obviously your minimum investment is probably around £10,000 or even more. And if you buy a dodgy property without really realising it, that has foundation issues or a big roof problem, or one of your tenants trashes the property, boom, £10,000 gone, just like that, and you've got to start all over again. So in terms of getting started, stocks are definitely much easier to get started with. But we don't want to just get started and stay a beginner. We want to make a lot of money. We want to become a millionaire. So what about profitability? What one really makes more profit? And there's so many different things to consider. You've got the gains on the stock, the dividends, the fees, capital appreciation on your property, rental income, expenditure, legal fees. There's so many different variables that go into calculating profitability when trading stocks or investing in property. When investing in stocks, the average returns are probably somewhere between 5 and 8% a year if you invest in an index fund like the S&P 500, but that could definitely raise to around 20% in a very good year. And obviously you could include dividends on top of that, which is probably another % or two. But obviously investing in stocks could also give you much higher returns. If you invested in Tesla in say February, March time, you'd probably have made a little bit more than a 5 or an 8% return. You'd probably have pretty much doubled your money by now. Property, on the other hand, tends to be slightly less profitable when considering yield after expenditure. You're probably going to be making somewhere between 3 and 5% yield if you're investing in Surrey or London, and maybe say 5 to 8% yield, maybe a bit more if you're investing in the north. However, when you factor in capital gains on a property, you can definitely make more money. although I will say it definitely does depend on what part of the country you live in, and I will also say that capital gains are never really guaranteed. But let's say you factored in an additional capital gain of 2%. That obviously means that you're definitely making some more money, and especially if you're using quite a big loan like a 90% LTV loan, that basically 10x's that 2% gain into a 20% gain, because obviously you're only using a 10% deposit. But I'll explain a little bit later in the video how exactly leverage works and how exactly you can use other people's money to make more money in property. Now you could say, oh Tom, but there are definitely some stock traders out there that can double or triple their money in a single year. And that's definitely possible for some really high level day traders or investors. But I've also seen firsthand clients make well over £100 million profit from property in 1 year. So you can make some pretty good returns from that as well. Fees are also very important to consider as well, and you're probably paying a whole lot less in fees when you're investing in stocks. It's probably only going to cost you somewhere around £5 per trade, and you might even get fee-free investing with your broker depending on which one you use. And obviously when you're investing in property, the fees are going to be much higher. You're probably looking at least £1,000 or £2,000 in legal fees, and then you've got mortgage fees and initiation fees and a whole load of different stuff on top of that. If you're enjoying the video so far, then be sure to leave a comment below, let me know which one you think is better, stocks or property. So what about tax? Because at the end of the day, you're going to lose a lot of the profits that you make to tax, especially here in the UK, and especially if you're a higher rate taxpayer. So which strategy has the better tax benefits? In terms of capital gains tax, you pay 10% or 20% capital gains tax when you trade stocks, whereas obviously with property, it's 28% capital gains tax. But it does depend on how you trade your stocks, because you'll only pay capital gains tax on profits that you make from holding stocks for the longer term, say like a few years or something like that. If you day trade stocks, then you won't be paying capital gains tax. But that's kind of similar with property as well, because you don't pay capital gains tax when you're flipping a property or when you're doing a quick refurb and sell. You only pay capital gains tax when you're selling a rental property that you've held for say a few years. If you are taking more of a shorter term strategy, like day trading stocks or flipping property, then you'll be paying trading tax, which is obviously either at 20%, 40% or 45%, depending on your income. Obviously you could route either your stock trading operations or your property investment operations through a limited company, because that has some other tax benefits like more deductible costs that you can take advantage of. But I would definitely speak to a proper tax accountant before obviously just jumping out there and starting a limited company. You pay tax on company profits at 19%, and you could pay out the remainder of those profits to yourself as a dividend, and you pay dividend tax at either 7.5%, 32.5% or 38.1% depending on your income. There are some other advantages as well. Obviously when you trade stocks you could take advantage of using an ISA to reduce your tax. Similarly with property, if you're selling a property that you've lived in, then you could take advantage of Principal Private Residence Relief, or PPR, and pay zero tax on your profits. Next up, what about using leverage or other people's money? This is a great way to multiply your profits with property investing or with stock trading, but it could also multiply your losses. When investing in property, you could take advantage of using other people's money by using a mortgage. You could effectively 10 times your money to buy a much bigger property. If you only had £10,000, you could go out and buy a £100,000 property by using a 90% LTV mortgage, which is obviously £90,000. This obviously 10 times is your profits as well, because let's say if you bought that £100,000 property in cash and you made a £1,000 gain on the price of that property, then that's a 1% gain on your investment. But obviously if you've only used £10,000 to buy that same property and it still makes a £1,000 gain in value, then you've actually made a 10% return, because obviously a £1,000 return on a £10,000 investment is 10%. This can be a really good way to amplify your profits and really quickly grow your portfolio, because obviously you can buy a much bigger property or many more properties with the same amount of money. But obviously you need to be careful not to take on too much risk. But interestingly, you can also use other people's money when trading stocks. Many brokers allow you to trade using margin. Some brokers allow you to use a 2 times margin, and some brokers allow you to use up to a 6 times margin, which means that instead of buying £1,000 worth of stock with your £1,000, you could buy £6,000 worth of the same stock with only your £1,000 because you'd borrow the rest from the broker. Now it can get really crazy because some Forex brokers allow you to use a 400 times leverage, which means you could use your £1,000 to go out and buy £400,000 worth of currency pairs. But it does get quite risky because obviously not only are you going to 400 times your profit, but you're also going to lose your investment 400 times faster if it all goes wrong. If you've made it this far into the video, then be sure to comment down below saying 10x, just so that I know that you've made it this far into the video. Now finally, what about work levels? Which one's harder? Which one takes longer? And which one is more like a full-time job? Now, despite what a lot of people say about property and stocks being passive, it's actually quite far from it. When you invest in stocks, you have to do a lot of research and stay constantly up to date with the market. You can't just eeny, meeny, miny, mo a stock and hope to make a 20% profit. You have to go out there and understand the fundamentals of a company. You have to understand whether it's oversold or overbought, or whether it's undervalued, and also technically analyse the stock as well and try and find the best buying point. Now obviously over the long term, time in the market is much better than timing the market, but obviously picking a good entry point never hurts. But it's the same with property really. You have to go out there and learn about your local market. You have to learn about which properties are more desirable, what areas are better or worse, and you have to stay up to date with the latest trends to make the best returns. But with property, you also have to resolve tenant problems as well. Maybe something's broken, or someone's having a disagreement, or there's too much noise. You have to go and deal with it. Or maybe you've got building problems or renovation problems. It could be a whole lot more expensive and take a whole lot more time and just be a whole lot more work. But despite that, neither of these are really a full-time job, unless obviously you're running a portfolio of say 50 properties, or you're trading stocks using multiple different strategies. Maybe you're day trading, swing trading, options trading, and long-term investing. There's also a whole lot more things to consider as well. With property, you can renovate the property, extend it up, build outwards, go downwards as well. You can obviously find undervalued properties and add value to them, and a whole lot more different things like that. So really, I don't truly think that there's ever going to be a definitive answer as to which is better or which is faster to become a millionaire between stocks and property, because there's just so many variables. I think it really comes down to personal preference. I myself prefer to invest in property, but obviously I know a whole lot of people out there prefer to invest in stocks. As always guys, if you enjoyed this video, then be sure to check out some of my other videos. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!